In this video, I'm going to be showing you how to find the most profitable unit in a new launch development. Let's go! Hey everyone, it's Elliot. Hope everyone's been awesome and welcome back to my channel. We've been seeing a lot of new developments popping up recently, and the other day I was following my friend to a new launch development. He's looking to buy a place, and when we were there, the agent was showing us a lot of the different room types and a lot of the different units, location, and you know, if you're there for the first time, it can be very confusing in knowing what to pick. If you've been investing in real estate for a long period of time, you would know that the choice of unit really makes or breaks your return. After all, not all units in the development are built equally, and their price points do reflect this. Property investment for new launch developments really come down to capital gain. After all, if you're looking at rental yield, you wouldn't be looking at a new launch development, you'll be looking at the resale market. And to maximize profitability, it goes without saying we have to do two things. We have to find a unit with a very low purchase price and find ways to maximize its selling price in the future. We'll split up my explanation into two parts to make things much easier to understand, and if you want a bonus tip, stick to the end. So for the first part, we're going to be looking at a unit that is rather undervalued or accommodating for its purchase price. And to do so, it's really good to know where a developer charges a premium for in new launch sites. Clear example would be high floors, right? The higher your units are, the more expensive they get, and it really makes it much harder for you to earn a good return. Let's just use an example. Let's just say after a few years, 5 years or so, all units in the development go up by $100 per square feet. If you guys know the math, if you already had a high purchase price, your return for a lower unit would be so much more than a higher unit already. Why? Because developers already cream off such a huge portion of your return from the get-go. They know higher units will sell better. And this line of reasoning is the exact same for units with a very nice view. Those units are called premium stacks by developers. They're called premium for a reason, right? You're paying a much higher purchase price for them. Whether they can translate to higher return is another thing. Worst case scenario is you pay for a view that is temporary, right? Oh my gosh, you bought a unit and then you see that on the master plan there's a development going to pop up and block your perfect views of this reservoir that you've had. You just lost your bargaining chip for selling your purchase unit at a premium, right? Because like, oh my gosh, I can sell this unit because it's fantastic views. The view is gone. You can't do that anymore. Now, I'm not saying pick units with a very shitty view of like the garbage chute or very low floors, right? Don't do that. We still need to consider one thing, which is our exit strategy, our investment exit strategy. So for an exit strategy, it's really good to think who are the people that are gonna buy our place. And this is of course the second point of the video, how to maximize your return, right? To maximize our return, what's very important is to think about our exit strategy. And our exit strategy, the first thing you gotta think about is who is our potential buyers, Who are the people that are actually going to buy a unit that you actually stay in? Because the larger your buying pool, the more competitive your selling price is going to be. For this point, there is no hard and fast rule, right? I'm not going to say that a 4-bedroom is going to sell better than a 3-bedroom, and a 3-bedroom is going to sell better than a 2-bedroom. It really all depends on your location. Just to get us thinking, let's just say there is a new launch development that's going on in, let's just say Geylang, right? Geylang has a new launch development. Who are the people that usually stay in Geylang, right? That's not what you guys think. We have the expatriates usually, and usually we have property investors that look at the area. So if you have these two groups of people, what type of bedroom size would you usually want to consider, right? Take a guess in the comment below, we'll see whether you guys got it right. Now, going in line with thinking of who is actually going to buy your unit, we're going to be talking about layout efficiency. Now, that is a huge factor that a lot of people consider when buying a place. Now, layout efficiency is very important, especially for countries like Singapore, where space is very tight. Everyone wants to maximize their little bit of space. I mean, one tiny square feet, you're paying $1,500? That's crazy. And the best part is that layout efficiency is one of the best ways to profit because developers often misprice this particular component. Why, you might ask? When you're buying off-plan, what do you see? You see a piece of paper and it's very hard to visualize the entire space. Yeah, sure, there is unit models where you can see, but it doesn't exist for every single type of unit type. Because of that, most people just anyhow pick, They just see like, okay, I like the space here, like the place looks very nice. It's very hard to consider layout efficiency. But when you sell, your potential buyer is going to view your space physically. They're going to see all the different areas that your space might not be very optimal for, right? Let's just say they have a couch, they can't fit it here because it's too small, but then they're going to say, you know what, I'm just going to look at your neighbor instead. You go to your neighbor's place, you can fit my couch. It's perfect for them. It's awesome for them. And what happens then? They're gonna buy your neighbor's unit instead of yours. Another point to maximize your gains is to pick units that are very close to entry gates. Again, with the same line of reasoning, on plan it's very hard to see the scale of how far you need to walk. And of course, your potential buyer is the one that's gonna feel the hard pain of walking through the entire development in order to reach your unit. If you're going to be renting out the space in the interim, it's going to affect rentability as well. So when you go into a showroom, the real estate broker there is going to be saying, look at this project's awesome, it's 15 minutes from MRT, it's super convenient, this and that. but they don't really consider the distance within the development, right? They're probably gonna say like, you know, from the entry gate all the way to the MRT, that's 15 minutes. If your unit is like really deep in, that's gonna be an extra 5 minutes, 20 minutes to go to an MRT, considering everything. That's not a very good deal. The good thing is that this problem doesn't exist for all developments, right? This problem only exists with developments with a huge scale. Let's just say your Momentum Park or your Interlace, you know, if you've been there, you know what I mean. It's crazy, oh my. To summarize the points, a quick checklist on all the things you need to look out for when looking for a profitable unit would be buying a unit on a mid to low floor with decent views and no sunny obstructions, a bedroom size popular with the demographic in the area you're buying at, pick a unit with an efficient layout, and if it's a big development, something that's close to the entry gate. Bonus tip for all those who have stayed till the end of the video, always buy a unit in the first phase of every development. You don't want to go into phase 2, phase 3, phase 4. Once you go there, don't bother buying. There's very hardly any chance you can make any gains, and if you do, it's probably because the location is fantastic, and in a sense, you should have bought phase 1. It's so obvious, you should have bought phase 1. Now if you go to a development with my checklist and say, hey Elliot, I found a perfect unit, can I confirm make money off of this? I'm gonna tell you, I don't know, and whoever can tell you that they do know, you know, swing them over to me. I would love to meet them. But if you ask me, Elliot, I found a unit with all these requirements, will this maximize my profit? I'm gonna say that given the data and given my experience, yes it will. That is the end, and I would love to know what you thought about this video. Please tell me in the comment section below, and if you have any suggestions on what type of videos I should be doing next, you know, write them in the comment section as well. And with that, till next time.